Welcome back, ladies and gents. I hope you're all having an excellent start to your week. In today's analysis, we need to get into the Bitcoin charts. Of course, as always, taking a look at Ethereum and Chainlink as well. But today's Bitcoin update is going to be extremely important. The charts are looking very hot right now. Therefore, I'm going to be doing an earlier upload for all of you, even though it is not the best time to upload, but I do want to get it out for all of these subscribers out there. You're going to get your notifications, hopefully, and we want to get it into it as soon as possible because for some of you that are waking up and for some of you that are potentially already awake, we want to get ready for the trading week, and there is some very important factors on the charts. So as you guys know, I don't like to waste any time. Let's get right into the analysis. Starting off on the 4-hour time frame, we don't want to kind of get stuck too much on the things we've already spoken about, but giving you a very quick update from yesterday's video in case you did miss it or even during the weekend. We had discussed the 4-hour stochastic here coming back to support, the support region here from the 19th of June. We did slightly break it, but the fact that the stochastic was very beat down with a lot of short positions coming in at these lows gave us a very nice probability to be watching for a higher move inside of the range. That followed with a break of resistance, as we can see, a small resistance that was formed here at the lows. Of course, that was the breakdown point. We had a few retests of this region before being able to set in some high lows inside the range on the very low time frames, which you can go back to the videos that we spoke about on the 15-minute, giving us that nice setup on the lower time frames to ride the 4-hour momentum higher inside the range. Now what has happened is we have simply come back to the bearish order block that we have been discussing for a very long time. If you have been watching the videos for the past, let's say 14 days, you would have seen us speak about this critical resistance point. This was the region that we rejected from on the 25th of June, coming from 35,500 around that region all the way down to about $30,000 flat. We saw the same thing up here where we did end up breaking the order block, but we did not have any volume backing it. Also, the volatility was extremely low inside of this range, and we did end up coming back down from this region. Now, this is all the trades that we've taken. We've discussed these trades, and I've shown you guys our positions and entries on these trades. Therefore, when we do have such an important region on the lower time frames, the bearish order block, we can look for the exact same trade, back to back inside of this region, basically, because we also started off the video yesterday speaking about the 4-hour stochastic coming all the way from the critical zone at the bottom here, all the way to the top, and ultimately this was looking very hot and looking like it was about to cross to the downside just before I uploaded the video. And once I did upload the video, we did have another push to the upside. We did hit our EQ off the range. In fact, it did go up to the upper point of the order block, giving you more opportunity to basically fill even more short orders if you had been trading this level, and giving you that very nice confluence with the stochastic looking very hot, at least expecting a move a little bit lower inside the range. But now this could have some very important implications if we are not able to bounce from the support region. You can see that price action right now has come back to the breakout point that we had inside of this range. So if I go ahead and zoom in a little bit, where do we break out of here? We actually broke out of around 33,929. That is the breakout point from the 3rd of July. Price action has come back down to that region, and as it stands, a little bit of a front run. However, what happens to broken resistance? It often becomes support, and we can get that resistance support flip. But that makes it a very important region to actually hold, because if we are to go lower inside of this range, like I said, it will have very important implications, especially at the S1. So we are below the weekly pivot right now. The general target for the weekly pivot is going to be around that S1, which sits at $33,328. Now, as you guys know, I like to trade off horizontals, off my pivots, and off the VPVR here as well. Volume profile is very good to see where your critical regions are, and right now we are below the point of control. So these are the things that I really like to trade with, that we mainly discuss. Our bearish order blocks here as well are very important. I will discuss the high time frames as well, but I've had a lot of questions about this ascending triangle. Personally, I don't like patterns too much, and I know a lot of people are seeing this ascending triangle here and potentially looking for longs, and it is a completely valid trade if you guys are managing your risk as well, because coming down to the S1, that is where the diagonal of the ascending triangle is in confluence of. But breaking that would bring in some major bearish volume from the region that has been protected by the bulls. So right now, we're getting very close to breaking the structure, in my personal opinion. Yesterday, on the break into the bearish order block, we didn't see volume once again. We saw very low volatility, which I believe we discussed in yesterday's video as well. So ultimately, this made for some nice confluence to the downside. But now the question is, are the bulls able to hold up this structure on, in Monday, right? Because this is going to be very important for the week. Breaking the S1, I would be targeting moves all the way down to the lows from the 2nd of July. And those lows are just extremely important, guys. Stopping before going down to those lows, yes, you could be looking at this as overall setting in higher lows inside of this range, whether we have an ascending triangle or not. And simply, that would give us a potential move past this order block. Now, the only way I would trade a long above the order block, if you've been watching the videos, I have been saying over and over again, the only way I would actually not short this order block, which we'll get into the trades later on in the video as well, but the only way I wouldn't is if we see that volume confirmation come in and also the volatility increase to the upside. On each move to the upside, we have not seen this. In fact, we have not gotten that confirmation. So since the break of this structure that we're seeing on the price action right now is getting quite close, in my opinion, and should happen this week, then it is time to potentially even stay a little bit more patient. And that is what I was really trying to explain in the past 2 days of videos, because we did have a weekend move to the upside with very low volume, squeezing those short positions. So there was absolutely no reason to be, very eager on those long positions. But now it is looking interesting for, the bears and the bulls with the volume confirmation and with the volatility confirmation. So definitely keeping an eye on the 4-hour once again. What could be a potential bullish setup here? Because a lot of people asking about that ascending triangle. You really want to be seeing the stochastic here hold the bullish control territory, which would be around this level. If we could actually hold the bullish control territory with a break back above the weekly pivot, and more importantly, a break above that bearish order block, then you could be looking at this as a little bit more of a bullish structure that is going to be potentially breaking finally that bearish order block that we have been shorting endlessly, because it's just the same trade over and over again. It's a low risk trade and it offers up nice opportunity. So therefore, I would like to see the bearish order block broken with volume confirmation, with volatility confirmation. And the key support for me would be right at the S2, $32,391. Breaking that, then I would be looking at moves much lower inside the range. That would be going back to our $30,000 lows, $28,000 lows, which is our high time frame support. So keep all of that in mind. That was a quick recap of virtually everything we've spoken about, apart from the lowest support regions that are very important right now. And now I want to quickly go on to the weekly and make this quite a short video today. So taking a look at the weekly, we discussed this yesterday, since all we've been doing is really going onto the lower time frames, speaking about our trades on the lower time frames and other trading opportunities on the lower time frames. But the weekly is looking very interesting. It is a high time frame, so it is very important to, at least on the weekends, speak about it. So right here on the weekly, we're seeing on our VIX, a lot of green on this. So ultimately, that's showing us that a potential bottom is close in the market. This doesn't tell us where the exact bottom is. It tells us that a bottom is getting close. So based on a weekly, that could extend to the downside further. But we spoke about ways of confirming this. So if you did miss yesterday's video, I want you to go ahead and watch it and look at the ways to confirm this. But I can quickly speak about it here as well. So with the way the weekly stochastic is looking, not crossed up yet, that's a very important factor to keep in mind. We want a cross up on the weekly stochastic. We want this to start to kick in once we see that weekly stochastic cross up with a break of resistance. So where are some resistance points? Our first one, based on the yearly R2, is at $36,000, $36,523 here. And taking a look at a break above there, that would be nice to target moves all the way to the upper side of the range. Now, the regions that we would be watching here are, of course, going to be the wick high at around the exact high is $41,338. So based on a weekly, if we were to stay patient, and if you are looking for swing long positions to the upside, with that confirmation above the region and the way the oscillators are looking here, and also the volatility, that would be good enough confirmation to move back to the all-time highs. However, if that does not happen, then you are still going to be in the broken structure that we have on the weekly. As you can see, we've got a high, we've got a low here, we've got a lower high set in, another lower low, and another lower high as it stands. So if we can break that last lower high and price action can start to gain momentum on the weekly time frame, then that's when the reversal on virtually on all cryptocurrencies can happen, because they have very similar setups to Bitcoin. So the lower time frames are good to look at, but we always need to stick to the high time frames. And of course, if you are in the technical analysis group, I did post a nice video about just weekly horizontal levels, some very simple stuff, right? About how important they are and about how we should really keep them in mind, because we can, as day traders especially, you can get stuck too much on the lower time frames and really miss the bigger and larger aspect, right? So what would be the bearish case here? We've already spoken about it. Breaking the yearly R1, where would you be targeting? You know, we speak about this even on the lower time frames, right? Because this is a yearly R1 at $30,000 almost. You'd be targeting moves based on a weekly all the way down to the yearly pivot. And that would be amazing buying opportunities based on the high time frames. So they are two trading confirmations that I would still be sticking by. Any closures below the R1 and any closures above the highs that we just spoke about, that is when we're going to be seeing this high time frame momentum result to either side. Of course, momentum, the VIX will not tell us the exact bottom, like I already spoke about, but with these confirmations, it gives you high confidence based on the high time frames here, which is very important to keep an eye on. So hopefully I've explained that well, and hopefully it's not, you guys understand what I'm saying here, which I'm sure a lot of you guys do. And based on the lower time frames, like we spoke about, the resistance is going to be that major high. We put this on our charts a few days ago on the video on the 30th of June. That's a major high. Above the bearish order block, we need to see volume confirmation. Volume confirmation below the S2 will be very bad for the bulls. That would be confirming further moves to the downside, at least to the S3, which we know typically doesn't break on the first go, but that would not be a good structure on the charts. So now let's move on to the CME charts very quickly. Now, CME is showing us something completely different, because we are back on the weekly pivot support on CMEs. That's at $34,185. Breaking back below it, I think we could go for a full CME gap fill. However, I'm not so confident about this right now, because how many times have we seen price action come down and actually not fully fill the gap? Why does that happen? Because people are only looking at the CME gap and kind of getting into these trades way too late, and therefore they get squeezed by the larger traders, right? A lot of short positions come back in on support, expecting for a full gap fill, and they do get squeezed. So the kind of bullish scenario here on the CME chart would be to hold this weekly pivot at $34,185 and start to reaccumulate back to the upside. And the 4-hour CME stochastic is actually looking much different as well, crossing up, but it's very important we hold that support. We had a very similar move down here. We were already looking for buying positions down here, because that was multiple swing failure patterns in a row. We also had from our monthly profile, which I will not add to the chart right now, that was, I believe, our upper point of control. You guys already remember that. This was a key support for us. So ultimately, we bounced up from our key support region, which we have discussed multiple times, 10%. And now we're coming back for this next CME gap fill. It's a partial fill, so that is completely fine. But the bulls really need to put in some major work starting this week to be able to break that bearish order block and to be able to flip momentum back to the upside for further moves up, at least higher inside the range, such as that $40,000 high and the $38,000 R3 here. I think we've got some good confirmations to be going off, but at this very spot that price action is trading at right now, I would not be looking to short, because you guys have been you've virtually missed the entire move here. So now let's quickly speak about our trading positions and get into those. So right here. So the short position that I picked up yesterday, very late. I stayed up for this very, very late, so I'm actually very tired today as well. Not good on a Monday morning, but I stayed up for this because I wanted to see a little bit of a move higher inside of the range as I saw momentum on the lower time frames. Not the 4 hour, because the 4 hour was turning, but higher inside the bearish order block. So I picked up a position once we saw a move above the EQ, and that was at $35,676. That was a short position and closing at $34,904. Now, so I've missed actually quite a bit of this move to the downside. I don't ultimately care about it too much. However, of course, since it is a bearish order block, you can be looking to hold that a little bit longer. But for me, as I always tell you guys, I look to kind of catch a chunk of the move and then wait for my next confirmations to give me my next trade. So I do like that position, and I know that if you did pick up this trade, potentially some of you guys are trying to swing it to the downside, but ultimately could have held a little bit of that. Not going to make every trade perfect here, so that is all good as well. But going into why and the reasoning, you guys already would know, but this is because we're in the bearish order block. We've had a move to the upside here. We're seeing very low volume, very low volatility, makes for a nice trade. Now today I did pick up some scalp positions as well, but they're nothing major inside of this region. We came back to support. We had a few swings of these lows here, and now really bouncing to the upside, but we're definitely going to have to wait and see if this lower time frame trend does flip. Let's say we start to get some higher highs and higher lows, get back above the S1. I'd be targeting moves back up to the $35,000 level, which is the daily pivot. So with market structure change, with momentum coming back in on the lower time frames, that is when we can look for longer opportunities once again. Now let's move on to the Ethereum and Chainlink charts. So I want to take a look at Ethereum firstly with you guys, going down to the Coinbase chart here. Now Ethereum is looking like it is rejecting the daily pivot here. So we need to get above that daily pivot. If we cannot get back above that daily pivot, then you'd be targeting moves down to $2,225. We've already spoken about kind of the high time frames. We know that we have a bullish order block, which we've bounced on multiple times here for Ethereum. So it's very important that we kind of hold this 4-hour structure, that it looks very similar to Bitcoin as well. Because yes, we have moved up. We have set in a low, a high here, a high low, a high high. And this is kind of break that last high low, but ultimately creating high highs. So it's just very important that Ethereum does hold up tonight as well. Tonight's price action is going to be important, or just this week in general, because yes, we've had a nice bounce to the upside, but can the bulls maintain this and finally bring in some volume into the market? Because that's not what we've seen, at least thus far. We have not seen volume come in at the bearish order block, which is a key resistance. And in fact, Ethereum is actually at a bearish order block right now. So this is the region that Ethereum is at. And as you can see, we are rejecting that bearish order block. So that would be the key region to actually take out. So the EQ right here, we can see we've hit it. On the first hit, that was almost a perfect rejection of the EQ. We did come down a little bit, pushed back up to the top of the order block before coming back down. Therefore, we need to get above the top of the bearish order block, which this wick high is actually what I would be going off at, exactly $2,389, which is very much in confluence with the weekly R1 at $2,388. So getting above that region with volume confirming, which we're not seeing right now, and volatility confirming that, then we could be looking for moves higher inside the range. But Ethereum, just like Bitcoin, is rejecting right now on the stochastic. So we need to wait and see if we can hold the bullish control territory. Literally the same analysis, guys. They're moving with Bitcoin. In fact, a lot of these altcoins are moving with Bitcoin, especially the majors, the USD pairings, which we trade on the derivatives exchanges here. And ultimately, they're looking exactly the same. They have the same structure, and the bulls will need to put in some work. So that would be the key region to be watching. And of course, the key support is the weekly pivot at $2,223. Breaking that would ultimately not be good for price action. You could look for an SR flip as a trading opportunity within this region. Something like this, your general target is going to be down at that S1. I like how we have a daily horizontal here inside of this region as well. So now let's move on to Link USD. And taking a look at our Binance chart, Link USD did reject from this resistance point that we have on our charts. I believe we put this on together, and we did wick past it a little bit, but ultimately did reject from that region. So I'd like to see moves and actually closures above the 1958 region. Closing above there would mean we're above the weekly pivot. That'd give us a target up to the R1 at 2048. Remember, we're on a 4 hours, so you could be looking 4-hour closures. As a day trader, I like to get in on the momentum potentially before, if I can catch the momentum. Therefore, we'd be looking at the stochastic here. Can we hold the critical zone? Literally the same chart, like I said, guys. So important to actually be watching Bitcoin right now, even if you are trading these lower time frames on the altcoins. They are very good, but Bitcoin is really going to set the tone this week. A little bit shorter on the altcoins because I would definitely be focusing on Bitcoin right now, especially if you're trading the USD pairings, as they will set the tone, as Bitcoin will set the tone for this week. And the Ethereum and Chainlink charts are still in the same ranges that we've spoken about, trading off the same regions that we've spoken about. So there's really nothing major to be speaking about here. So I hope that you've enjoyed today's video. Go ahead and leave a like on it if you haven't already, and subscribe to the channel. I would very much appreciate it. And if you would like to join the private technical analysis group, get access to all of my content, go ahead and send me a message on Discord. First, you need to add me, wait to be added back, then send through the message for all of the information. Have a lovely rest of your day, and I will catch you in tomorrow's one.